All right, everybody. In today's episode, Paul and I dive into being an owner and the importance of being an owner in is pretty much every area of life that you can be, because that's really how true wealth and lasting wealth is created. Right, Paul?
No, absolutely, Dave. And we brought up some real world American examples, names that you'll be familiar with. I'll throw one out there, Walt Disney, but many others, both and contemporary examples as well, of famous people, wealthy people, owners of businesses and empires that used whole life insurance as part of their overall financial strategy. So enjoy.
Hey, I'm Dave,
And I'm Paul.
and this is the Wealth Warehouse Podcast. All right, what's up, Mr. Retiree? How's your week shaping out? Really busy, Mr. Old Retired Guy?
Yeah, it's get some meetings, still got clearing the army things to do and leave to take. So I start leave tomorrow for about 10 days. Tammy has to have like this procedure done, so she gets like 6 weeks convalescent leave, so that's nice.
Wow.
Yeah. So I was able to get 10 days caregiver leave, which is non-chargeable leave for that. So I'm starting that tomorrow.
There you go. You got to
But
work
yeah,
all
I'm
the
done going to the
angles.
office.
Yeah.
Which
Obviously, with the growing the
Yeah,
beard
which
out.
is
What is that
it's
like?
so nice.
Was that like a 3 o'clock shadow for you?
Yeah.
You
Yeah, you
shaved
can
this
hear it
morning
growing.
at 8 a.m. Yeah. Well, nice,
So
man.
it's
That
been
sounds
it's
that
been
sounds
great.
enjoyable. Good.
Yeah.
Good. I had to come out to the office today. It was too loud in the house. We have who I like to call our live-in carpenter. Somebody doing work in the house, but it's just taking a long time to do it. So a lot of
Yeah.
loud noises. So had
Well,
to get out.
you can never have enough shiplap.
Shiplap. Everybody loves shiplap. Yeah. Apparently
I
that
like
craze is
shiplap.
still going on. So yeah.
Yeah, I mean it's shiplap. So
Yeah. It never goes out of
so
style, I don't think.
yeah, you can always paint it or something.
Exactly.
Change the look of it.
Yeah.
Anyway,
Anyway, man, well, so man, we decided we wanted to talk about something that's near and dear to our hearts, and that applies to every single owner, every one of our clients, at least. We'll say that, and that's being an owner. What does that mean to be an owner? And really, at the end of the day, I think the only way to, I would say, get rich. I don't think get rich is the right term, but to really create wealth
sure.
is to be an owner. Be an owner in what? There's so many different things you can be an owner in. But to create wealth, what would you say you really need to own?
Well, I always like to when I've been bringing this up with people lately on with prospective clients, and I like to think that like I don't watch the show, but the show Shark Tank always comes to mind because all those people that are there, what do they always ask for?
They
Not interest only payments on their loan. They ask for
no.
equity
They say I'll give you $100,000 for
for
20%.
20% or
Of your
whatever.
company,
Right.
right?
They want an ownership stake in the company.
Yep.
And I think that's very telling because those people are all worth, I think on the low end, $100 million in that show or something. And then on the high end, Mark Cuban, I think is at the top with, multiple billions.
Billions. Yeah. Right.
So, yeah. So from those people who have had success in their own right, in their own business, creating businesses, investing in businesses, they understand that being an owner of something is how you get to those levels.
Right. So really, you ask kids, hey, when you think of a rich person, what do you think of the profession that they're in? What do rich people do for a job? And what are they going to say? They're going to say the stuff they see on TV. Like, oh, you got to be a lawyer, an attorney, or maybe I want to be a doctor because they're rich.
Yeah.
Certainly a
Pilot,
rocket
maybe.
scientist is going to be rich, right?
Yeah.
But I mean, we just looked this up. You can just Google this, a couple different sources, but I saw the average salary for an attorney in the U.S. is like $165,000,
Hmm.
right? I mean, it's not low, but it's certainly not what I would qualify as rich, especially not these days
Right.
with how expensive everything is. A doctor is the same, just an average doctor. Now, of course, you're talking, general practice on the low end and plastic surgeons on the high end.
Sure.
So they don't make as much money as you might have imagined they do, though.
No, I remember going to my pediatrician's office when I was a kid, and in the parking garage there were always nice cars, right? Because to me as a kid, if you were just like where I grew up, we drove Dodges and Chryslers and Fords or whatever, Chevys. They drove Mercedes Benz, BMW, Volvo, Audi, I guess maybe later on, but and this was private practice, so they were partners in the business. And of course, I didn't think about that then. I just assumed, yep, he's a pediatrician. He went to Tufts. He makes big bucks. And of
Right.
course, they did. They did make big bucks, right? They were making six figures back in the 80s and 90s, which is now, if you adjust for inflation, they're making multiple six figures probably still.
Yeah.
So,
Right.
but
But the
yeah,
real
they
wealthy
owned
ones
the business,
are owners. Yeah, like attorneys. The wealthy
the
attorneys, the
partners.
people that become wealthy, yeah, they're partners, right? They buy in, they purchase equity, and now they have ownership in the firm. Or maybe they start their own firm, and their names on the wall. I still remember the name. I grew up in, Overland Park, Kansas, and there's these commercials. When I was a kid, it was Rubens Case, Rubens Cambiano, and Bryant because there's strength in our numbers. Well, those names, Rubens Case, Rubens Cambiano, and Bryant, those five names, those are the partners. Those are the
Right.
owners. You can bet when you call that number, their 1-800 number, you're not talking to one of those five. You're going to be talking to one of their underlings
They're
who are just
affiliates.
their affiliates, an employee. So they're not the owner. The owners, they probably don't spend too much time in the office, to be honest. Maybe they're litigating, but maybe they're out on the golf course. So they're the wealthy ones. Yeah.
Yeah,
I mean, even rocket scientists, I even looked that up because you think, wow, rocket scientists, ain't too many of them. The average salary for a rocket scientist is like $120,000 a year.
right.
Their student loans are more than that.
No question.
Yeah.
Yeah, we have some friends that have bought into some businesses over the years. This one, just happens to be a CPA firm, and I know the capital expenditure to buy in as a partner was substantial. Like it's a lot, but and this is before I was in this business or even thought about it. But thinking back then, it has to be worth it. Otherwise, they would they wouldn't do it. These are smart people, right? They're one's a CPA. Math is like and numbers are kind of their thing. So it has to be worth it to be 10% owner or 20% owner or whatever share they're buying. It has to be worthwhile for that
Yeah.
years and years of capital expenditure going into that every single year. It must be, the juice must be worth the squeeze in the long run.
Yeah. Exactly. So not everybody listening and not every one of our clients has their own business, like a home business or something like that. But every single thing every one of our clients owns is part of a mutual life insurance company. Those life insurance companies are mutually owned. They're owned by policy owners. What I
Yep.
like about the difference I see between being, say, an employee or being a partner in something, because really you're kind of like a partner of a mutual life insurance company. You're not the only owner. It's not a single member company. You're a partner. Cool thing about partnership, the way I like to view it is I could go on vacation for a week, come back, and my value has increased. Like the ownership, the amount of value I'm going to get in return, the earnings, My equity, everything has increased while I was gone because I have other partners working on my behalf while I'm gone. And every partner does
Yep.
that for each other. So you actually can take time off, come back, and be worth even more than when you left. So that correlates a lot to whole life insurance, where you can, with your policy, you own a policy. Doesn't matter what you do. You could, as long as you pay your premium, you could forget you even own the policy. But guess what? Next year, your dividend is likely going to be higher than it was the year before. So you just earned more. You made more because you're a partner. You have some
Yeah,
ownership.
and you didn't have to do anything
No.
because there's other partners in the business that are doing it on your behalf, as you said. So what could be, and I think our clients understand that too, like the concept, because we do talk about it, the concept of ownership. And when they put the two and two together and that light bulb moment occurs, it makes so much sense. All I have to do in this unilateral contract is pay the premium every year, every month, every quarter, whatever your motive premium is. And the custodian of that premium, in this case the mutual company, is going to do what it's going to do, what it's been doing for 119 years, 135 years, whatever company you're with. And they're going to continue to do it conservatively and do it well. That's peace
Yeah.
of mind.
Yeah. There's not much more peace of mind than that.
That's
Knowing
as
that
Yeah,
it's going to
that's
be
as
there when you need it.
passive as you can get
Yeah.
in the financial
Absolutely.
space.
Yep. So that's just one mode of ownership. Maybe a lot of people also own their homes, which, you don't really own it until you pay it off. But
And even then,
yeah, right. Just try not paying your taxes. But
yeah,
statistically speaking, people who purchase a home versus rent a home for their entire adult life are better off financially. And that's probably because that's not the causal factor, but it's one of the factors.
no,
There's
it's
other
tied
things they're
to
doing.
it's a result of certain behaviors, right?
Behaviors, right.
Just like the overwhelming majority, if not all of our clients, are prudent, responsible people that live within their means, don't steal the peas, aren't afraid to capitalize, and those are all behaviors, right?
Yeah.
I've pushed clients away who are friends of mine, who I serve with in the military, that, hey, listen, you need to get your financial house in order before we can do this, because this is not going to solve that behavior problem. It's
Right.
just not, right? It's not. I wish it did, but it's not magic, right? And we don't want to exacerbate that problem that you have. We want to solve problem and then redirect all that money that you were spending on that problem or those problems. Like, you don't need 10 Amazon boxes coming to your house every day.
You don't?
No,
Yeah.
you just don't. I love it.
No.
It's so convenient, but you don't need that.
Right.
Anyway,
Yeah. So, yep, you got to solve those problems before you can move on to this. But ownership is key. Just think about a business. You and I both are business owners, and a lot of people listening are business owners because IBC is, business owners are drawn to it because it's all about controlling your own capital, being in control of the terms, having guarantees, having access to capital when you need it, that kind of stuff. Business owners love that. That's what they're all about. But the thing's just being a business owner, that's ownership, even if it's on a small scale. Like everybody, I think Bill Clinton said this like 30 years ago. He's like, the best thing I ever did for my taxes was own a home business. Because
yeah,
when you think about it, if you own a home business, one of the best things you get are deductions. Everything
right.
starts becoming a deduction. I can deduct that and that and that and that. Like what happens, like Robert Kiyosaki, the Rich Dad Poor Dad, if you look at the cash flow quadrant, read that book, most
Yep.
people have their income. You get taxed on that, and then you pay expenses, and then you're left with whatever's left over. Well, business owners, what do they do differently?
They're writing things off right off the top.
Right. So they pay their expenses, then they get taxed on what's left over.
Hmm.
That's a big difference.
It's a huge difference.
Huge, man. And when you're a
It's a
business
huge difference.
owner, you really start looking at through the lens of what can I not justify as a business expense.
Right.
So that, I
That's
mean, if
right.
you're not a business owner, if you don't have anything, join a multi-level marketing company that you believe in and can get excited about and do that because you can write off a lot of stuff.
Yeah. And it's going to be a home-based business too. So,
Yeah.
yep.
Yeah. Nothing like ownership. So, um, yeah, man, what else? What else? Like you listed a bunch of names of business owners throughout history and maybe not even business owners and high profile individuals.
I
That
did.
was kind of a
I just
fun
pulled.
list. Like pull that
It
list
is.
up and
I think this is entertaining. I used AI, and it's factual information because we knew this, but um, first I kind of dug in and just said, um, are the wealthiest people in the world generally business owners? Yes. And then it does a spiel, and it gives a few examples, a few American examples, Jeff Bezos, Elon Musk, Mark Zuckerberg, and the list goes on. Inherited or family owned businesses, so legacy businesses.
mm-hmm.
Walmart, probably the most famous, the Walton family. The Koch family with Koch Industries gained wealth by inheriting family businesses, and they still run them today. And then the third example was investment firms and venture capital, right? Kind of like Shark Tank, right? That's like venture capital. Like here you go, Berkshire Hathaway, Warren Buffett, probably the most famous investor in American history,
Most successful. Yeah.
and extremely successful, right? And he's going to give most of it away. And but then I kind of was like, okay, so that confirmed what I thought. And then I pulled up, what famous Americans, and this is exactly what I typed into it, what famous Americans used whole life insurance as a substantial part of their holdings. And it gives you a little opening paragraph, and then it names, we've talked about Walt Disney. Walt Disney used the cash value of his whole life insurance to fund Disneyland in the early 1950s after struggling to secure financing from a commercial bank. Right?
So
So,
he
hey,
he tried a bank first and then went to his life
I
insurance.
want to draw some stuff. Oh, get this mouse, and maybe he's married and he's got some friends. He's got this dog, and anyway, no, right?
Wait, they wouldn't give him
Banks,
a
they
loan for
hate
that?
startups.
Crazy. Yeah.
We talked about this in a business class I took for SFL TAP the other day, and banks generally don't like startup businesses, right? They're
Yeah.
extremely risky. They don't have anything, right? They have no success. They have no capital, whatever. J.C. Penney, another famous example. Apparently his middle name was Cash, which I think is funny. Same thing. He leveraged the cash value from his whole life policy to pay employees and keep the business running during the Great Depression. So,
Wow.
the founder of Pampered Chef, Doris Christopher, which was later acquired by Berkshire Hathaway, so funny, used a loan from her life insurance policy to launch the business. John McCain, Ray Kroc, Joe Biden. So there's 6 names, and then I asked it to name more famous Americans. So I'm just going to go through the list here, not really explain. But Ted Benna, father of the 401k, you can look him up, Benna. Jim Harbaugh,
Actually, look
University
up
of
what
Michigan.
he has to say about the 401k also.
Yeah, I know.
Now, I mean, after
It
it
is
was
pretty funny.
created. Yeah.
He falls perfectly in line. Like
Yeah.
Jim Harbaugh, Ben Bernanke. So if you don't remember who that was, folks, he was the chairman of the Federal Reserve after Alan Greenspan. So during
During
the
Obama's
2008 financial crisis and stuff. Yep.
presidency. Yeah.
The Rockefeller family. We've talked about that on this podcast. Joe Gibbs, former NFL coach and NASCAR team owner, publicly endorsed using whole life insurance as a financial foundation. And the last name is Stanley Druckenmiller, billionaire investor and hedge fund manager, has reportedly used whole life insurance as a wealth management tool. Anyway, so the list goes on.
There's one more on
You know,
that list who I've tried to get on the podcast, Rick Barry.
Yeah,
Hall
Rick
of Fame
Barry, the basketball player.
Yeah.
Yep.
But he's a big proponent of whole life insurance,
Yep.
which I think every professional athlete should be. Man, if not, they're missing out. I mean,
Well, I'm
it's
pretty sure I heard anecdotally, at least. I haven't looked. I guess we did look it up at one point years ago, but that Shaquille O'Neal like put $1 million a year of his salary, starting from his first year in the NBA, into an annuity,
yeah.
just to have some guaranteed. If everything else fell apart, he would have guaranteed future income.
Now there's a guy who's an owner,
And
and imagine all the
let's
equity he's gotten in so
yes.
many
So
businesses. Yeah,
yep. So Michael Jordan has done very well. Shaquille O'Neal has done very well. There's a lesser known guy that played like in the 70s and 80s for the Knicks, I think. He was on a Wendy's commercial a few years ago. I can't remember his name, but he at the time he owned like, I don't know, 70 Wendy's or something.
yeah,
And it's assumed each one of those is bringing in 50,000 a year to him as the owner. He's doing pretty good,
yeah. Not shabby,
right? More money than he ever made in the NBA.
especially back then. Yeah,
So, to kind of tie it all in, that's one of the things that you know, we kind of harp on is that, and we've talked about it on this podcast, I think, several times, is that concept of ownership. When you own a whole life policy through a mutual company, you are now part owner of that company. The company that's going to guarantee you the access to cash value. It's going to guarantee the death benefit. That's paid a dividend 119 years or better in a row, right? So you think every year since, for example, let's say 1905 as an example, a dividend every single year through the Great Depression, World War One, the Great Depression, multiple panics, but they keep chugging along.
yeah,
And it's not because they're greedy and they keep, it's a bad deal for you, as you and I were reading some Dave Ramsey earlier, because we were thinking about kind of doing a different episode today, folks, but we steered it in a different direction since we just kind of harped on him a little bit the other day. So, but yeah, maybe we will have to do another, because there's so many lies in what they put out. It's frustrating. But
there's
anyway,
so many,
no,
it's irresponsible.
yeah, they're not greedy. The rate of return a company makes on a whole life policy over the life of that policy is in the mid to high single digits.
Yeah, and you make a really good point. These companies, they're not greedy. If there is a company, a corporation that's been around for over 100 years that was just out for itself and
Wouldn't exist.
not right, it wouldn't exist anymore.
Other
They
than the
weren't
federal
looking out-
government.
Yeah. Well, if they weren't looking out for the best interests of their clients, or in this case, their owners at a mutual life insurance company, your policy owners, they wouldn't exist anymore. Companies can only last for so long like that, with an ethos like that. They just don't last. People stop doing business with them.
Yeah, that's right. And these companies, these mutual companies, and stock life insurance companies too, and auto insurance companies, when there is a claim, so in our case, a death, the claim is going to be paid. And the companies, it's a huge outflow of cash for them, right? Some of these policies that are, been enforced for 40, 50 years have millions of dollars of death benefit, right? Also millions of dollars of life insurance cash value. They want to pay it. They are going to fill their end of the contract and pay the death benefit to whoever's listed as the beneficiary.
Yeah.
And they're unlike banks. They're not making 2,000% a month on your money. They're just not.
No.
I'm sorry. But they want to pay the death benefit. It's an important, taking care of their policy owners is their top priority.
Yeah.
Right? Thinking 30, 40, 50 years down the road. That's how these companies think. They think long range, just like Nelson tells us to do. So yeah, they're not greedy. They're not greedy, for sure.
No. Nope. Good point. Made a really good point there. So ownership is important. And I think that goes for anything, whether you're, obviously business owner or owning your whole life insurance policy. But even when I make investments now, the first angle I look at is, what's my risk? What's the risk to me and my money? And then I want to know, do I get any, what's the upside? Is equity included in this? And if I can minimize the risk and maximize the ownership or the equity I get in something, then That's how you get me to invest. And that's where I put my money. Places I get equity.
Yeah, I've offered that over the years through some private loans that I've made where, there was no equity position offered, but we talked about it with people and they're like, no, I'd rather just pay, pay this, this interest rate or whatever. And that's fine. But I understand that, right? They want to control 100% of their company. And
Yeah.
I respect that. I think that's actually smart, right? But but from the lender perspective, yeah, I always like to look for an ownership or an equity position.
Yeah.
That's why real
That's
estate
great.
is kind of nice. It's a building I can touch, renters who pay, and I get an equity stake.
Right. And that's ownership, right? So a
Yep.
lot of millionaires in America, probably the majority of people who went from not being born into money to becoming a millionaire did so through real estate.
Yep.
At least that's what all of my real estate coaches told me in my mastermind groups. But I think it's pretty accurate. I mean, real estate's one of the
Yep.
most proven ways to create wealth
Yep.
because, like you said, it's real. You can touch it. It's on land that they're not making any more of.
Mm-hmm.
So it's got a real tangible purpose. Kind of like gold. Gold.
It's not liquid.
Yeah, it's not. Kind of like gold, but it's
Yep.
got a very intrinsic value. There's intrinsic
Yes.
value to it,
That's right.
right? It's not manufactured value.
Yep.
Yeah. So, well, all right, man. Cool. I hope everybody got something from that. And, again, if you don't have a home business of some kind, start exploring. You don't even have to be serious about it. You don't even have to show a profit, as far as I know. You can take deductions for years without having to show a profit, but definitely talk to an attorney or a CPA about that.
Right. This is not tax or legal advice.
Nope. Nope. This
It's
is just
not,
real life, street level,
No,
what
I
we
think
recommend.
but it's a good thing to talk about because it's up to you, right? It's up to you. You are likely, if you're listening to this, you are the money printing machine in your family. And we've
Yep.
talked about that. Like, that's why you insure yourself through us or through Dave or through me individually, right? That's why you are protecting your ability to print money. You are guaranteeing that your money printing ability will not be interrupted if you were to exit this earth prematurely. So,
Yeah. And guess what? If you purchased a policy, say you got life insurance 5 years ago, but you're printing more money today than you were 5 years ago, you probably need to go back and update. It's not a one and done. It's not, I've got a policy, I'm good. Well, how much? And is that kept up with your income?
yeah. I mean, you are good, comparing yourself to everyone else.
Yeah.
All the other buy term and invest the difference A.L. Williams followers. They don't know who that is, but
Just say Dave Ramsey followers.
Dave Ramsey. That's where you got it. I'm pretty sure. Anyway, yeah. Like,
But
because-
reevaluate. I'm at the point right now where
Reevaluate.
clients, from a few years ago are coming back saying, I'm ready for a second policy on myself.
Yeah, I'm waiting just into the new year. I'm gonna pop a new one on myself.
Yeah.
Again, I'm still waiting on that windfall, but I know I've got future windfalls coming up, so I might open two on myself next year. Actually, in
Might need
2025.
to capture that.
Yeah.
Capture all that, right?
That's right. So, yeah, David makes a great point, folks. It's not a one and done. Expand your system to accommodate additional income.
Yep.
I know we have an episode on there somewhere, but like, when is the
sure
right
we
time
do.
to open up another one? Well, I know I'm ready because I have money sitting in somebody else's banks. Two of them, in fact,
Yeah.
and just waiting for January.
All right. Well, waiting's not always the best idea, but you've already got plenty of death benefit right now. You're just converting, actually.
I'm
Convertible
converting.
term. That's the nice thing. You got that convertible term. You can play the waiting game and say, I'm going to wait
Yeah.
another 6 months or so. You can do that
Yep.
because it's already
I
there.
can do that.
Yeah.
Folks, a lot of you have been reaching out about the convertible term, so you're listening and you're getting it. It is It is the best thing you can do. If you've just gone through underwriting and you got approved, let's take that approval for a ride and add some convertible term. It's cheap, and we can do it right now because you're already underwritten, right? And we're doing that with several. Clients. The client that I'm thinking of offhand is one's in California, one's in Ohio. So,
yep, I'm doing that for a client in California as well, right now. So go listen to episode 18 on that convertible term, because if you haven't done that, set yourself up for the future, and put that in place so you can say, I'm just going to wait 6 more months or next year, or I'm going to play it out for this bonus that I'm expecting next summer. Something like that.
I can do that because of what Dave said. I have convertible term in place. Dave has convertible term in place. We can wait and be selective because I'm not losing anything.
Right. Except paying the term. I'd rather put that money towards whole life because I'm going to get it back at some point. With term, I'm not. It's gone.
That's right.
Right.
Also,
yeah. There you go. All right, everybody. Hey, and have a great week. Thanks for listening. Until next week, control your capital.
Or somebody else will.
Hey, thanks for listening, everybody. If you'd like to have a conversation with us to see how you can become your own banker, or if you have any questions or topics you'd like us to tackle on a future episode, please send us an email to davidandpaul@theibcguys.com.
And subscribe and leave us a review if you're on Apple. Follow and leave us a 5-star review if you're on Spotify. And please share this with your friends. We'll see you next week.